Good afternoon, outliers. How are y'all doing today? I gotta tell you, I did not get much sleep last night. Our smoke alarms started going off at 3:40 this morning, right? And, it's the chirping with the batteries need to be replaced, and like it wasn't just one of them; it was two of them, and they were deceptive, right? It was like I changed the battery on one, and then I thought it was good, and I'm back in bed, and a few minutes later, the other one is chirping. I'm like, "You son of a gun! I'm trying to go back to bed." And then after I changed both the batteries, it still chirped. And then I had to go reset both of them. So it's 3 in the morning. My wife's up. She was chill about it. I mean, this is something that used to happen a lot more frequently with our fire alarms for some reason. I don't know. Maybe like once a year it would happen, but it's been a while. And my kids somehow managed to sleep through it. So it wasn't that big a deal. But it's just like one of those things where I was talking to my wife, I'm like, why does this always happen at 3 in the morning and not 3 in the evening? There must be some sort of calculation inside of the smoke alarms to start with the chirping at 3 in the morning instead of 3 in the afternoon, I should say. And it's like, come freaking on. And my wife was like, listen, I'm just glad I did it when you were here because I'd been gone since Friday to real late Sunday night. Um, and so this was happening to Monday night into Tuesday morning. So it was just by one day did she make it, because like she probably would have just got a hotel. She's like, I'm not dealing with this. We're out of here. So hope you guys had a great day, a great afternoon. I hope you had a great night's sleep as well. How you doing, Peter? Hey, Michael, glad you're here. Did you see the news? I saw this and I was like, oh, we should probably talk about this. Let me share my screen here. So this is a major problem for the Fed and for every American. Let's see what they're talking about here.
President Stephanie Pomboy. All right, Stephanie. So it feels like the Fed's between a rock and a hard place here.
Absolutely. I mean, they definitely did a number on themselves this time. And I have to agree, in terms of Madison's commentary, the inflation thing is really the sticky part, because, as you know, we're still living in a world of high energy prices that don't seem to be moving lower anytime soon. And then also you have this housing component of the CPI that stopped going down. Existing home prices are now up year on year. And
oh, how about that? I actually didn't realize that home prices are going up year over year. That's exactly what the Fed was trying not to have happen, right? One of the big selling points of raising rates was, and I've explained this many times, so forgive me if you've heard this again, but one of the reasons for raising rates is if I want to go buy a house, right? Let's say I have 500,000 to go buy a house with, and I go out into the marketplace and I look at the houses, and there's nothing in my price range. Then I'm like, okay, I guess I just won't buy anything, right? So the Fed, by raising rates, is now motivating sellers, because the sellers are going to say, well, nobody's buying our house out here because they can't afford the mortgage payment when rates are 7%, right? If my mortgage today is 7%, I can't buy as much of a house as I could when it was 3.5%, right? So now we're looking at this situation where the only way for a motivated seller to get out, they can't cut the interest rates. They're going to have to cut prices. And only once they cut prices will then they be able to find the buyer for the $500,000 house. So the reason that we do this is to push asset prices down, because people still need financing in order to buy these big assets, and they're not going to be able to manipulate. They're not going to be able to manipulate the interest rates. So the only thing that a seller can do is lower prices. But she's saying that's over.
Substantially, and that is going to feed through to that CPI with a lag. So I think we may have seen the declines already through, and it's going to be hard for those numbers to come down a lot from here. On the other hand, the unemployment rate is signaling that it's time to cut, and I think that's why Bill Dudley's hair was on fire on Monday when he said, the Fed has to cut and cut right now. I think he rediscovered the SOM rule and realized that the unemployment rate's going to shoot higher. But yeah, the Fed's in a box, but they placed themselves there. So
we've been seeing unemployment going up for, it feels like, ages at this point, right? We started seeing tech layoffs like 2 years ago, maybe 3 at this point. And at no point have we really seen any sort of clawback in the job market. But the government, they'll put out the unemployment numbers and say they're going down every month. There's more people on the payroll every month. And then they'll quietly come out and revise them down. I mean, there was a point last year when I was covering this where they had overstated all of their releases by 400,000 jobs in the span of 2023. So 400,000 jobs apparently just didn't exist. They just made them up. They just faked them. Like, oh, well, 400,000 jobs is nothing, right? I mean, like, it's just a rounding error in this case. No. And then to add insult to injury, right? It would be like, let's say it was September and October. For the job report in October, let's say we'd raise by 200,000. Then they'd quietly revise down September by 200,000. So it was like a net zero. And it's just continued to be that for months and years at this point. This is how the Biden administration works. We're going to lie to your face and then gaslight you on the backside, right? They've done it the entire time they've been in office, and we are within 100 days of fixing that.
Very little sympathy.
So another problem, though, right? Let's face it, though, another problem for the Fed and every American, all the deficit spending, the national debt, which, by the way, officially crossed $35 trillion last night. That's right. We did it again, folks. Now, and you wrote a piece that says that there's a simple and elegant fix that could serve as a bridge to a time when
a lot of people are making a big deal about this $35 trillion number. This is not the first time I've come across it in the last couple of days. How do you feel about it? I actually would like to know your opinion. What do you think about this $35 trillion debt? To me, it's just monopoly money, right? To me, it makes no difference to me in my life. I cannot control this. I have no opinion on it. It is what it is. But I'll tell you, it's not a good thing, clearly. And if we're sending out billions and hundreds and hundreds of billions of dollars to every other country in the world, and then opening our border, right? We're not taking care of ourselves, and this is what we have to show for it. I think that is quite a huge breakdown in policy. I mean, it'd be one thing if we were using this on ourselves, but I think the reality here is that we're taking this debt and spitting on everybody else, and then kind of hosing all of our children in the process.
Maybe we would start tightening our belt. Walk us through that. I mean, simple and elegant. I want to hear it.
I know it sounds almost too good to be true, and I'm the last one to buy into those kind of ideas. But yeah, I mean, we are the problem that I've been really concerned about for a long time, and you and I have talked about previously, is how are we going to finance these deficits? I mean, obviously, we need to at some point get serious about reining in spending and reducing these deficits. Right now, neither political party seems to have any interest in doing that, and with the economy,
no, nobody is pushing for reducing deficits at this point. But it's like the opposite of the Dave Ramsey snowball, right? Where it's like, oh, we want to pay off one thing and then use the amount we paid on the first thing to work on the second thing. And by the end of it, you've paid off everything, but it's really not felt like all that much because you're really just paying the same thing. But instead of paying it across all these different places, you're rolling it into the next one. But it's like the opposite of that, right? And I heard this phrase one time. It was like, hey, how did you go, or not me, but how did a person go bankrupt? And how did you acquire so much debt? And they say something like, well, it was little by little, and then it was all at once. And I think we're probably getting close to the all at once point here.
In its fragile state, whether you believe it's in recession now or headed there or not. Clearly, it's fragile. Now is not probably the time to impose the magnitude of discipline that it would take to get this budget under control. That said, we still have this massive problem where we're issuing $2 trillion plus in treasuries a year. Foreign central banks who used to pull down all that issuance purchased 70 billion over the last 12 months, 70 billion. So we have a shortfall of $1.97 trillion a year. Who's going to buy all these treasuries? For a while, we had the Federal Reserve doing it. And my concern, as I've voiced to you many times, is that that's the only solution. The Fed is going to have to go back to monetizing treasuries with all the dollar debasing inflationary consequences of it. There is a solution, and we'll see if anyone buys into it. And that is if we made treasury securities tax-free, the same way that municipal securities are tax-free. Right now, if you buy treasuries, the interest that you receive is taxed at the federal level, not the state and local level, but you do pay federal taxes.
Right.
If we did away with that, you would generate a huge new source of demand for treasuries as people took advantage of the tax exempt status. So you'd create.
Yeah, that makes a ton of sense. However, they're hunting for as many taxes as possible. So if you made that tax free, well, it sounds great on the surface. I think you're going to have such political blowback on this, especially from the Democrats. Give me a break. They want to tax you just for walking down the street. They want to tax you on unrealized gains on your investments. So keep in mind, let's say you buy a stock. It goes from $100 to $200, right? Well, they're going to say, clearly you need to give us money for that, right? You haven't sold your stock yet, but it's gone up in value. So give us a portion of that, right? So let's say you pay them 10%. So your real, notional now is 190. But let's say it now goes down in value, right? Let's say it goes back, so it goes from 100 to 200. Now it's down to 150. They're going to say, dude, sorry, but like you don't get any refunds on the taxes you paid, even though you're now down. So screw you. We want to make sure that you're only paying on the capital gains when they're going up, and we're not going to give you any refunds in the process. So I mean, they're trying everything they possibly can to bolster the tax revenue. I mean, even Joe Biden came out and he's like, all the trillionaires, I mean billionaires, if they just paid their fair share of taxes, we'd have like 38 million trillion bazillion dollars, and we'd fix all this national debt. Jill, come change my diaper. We all know that that's not the case, right? The people who are the biggest payers of taxes are going to spend everything they possibly can in accountants' fees to not do that. Of course they would. Why wouldn't they? Right? I think it was Trump who even said, if you're not using tax loopholes, you're not being American, or some. I know I butchered that quote, but it's something like that. But it's like, listen, they give you these tax incentives for a reason, because it promotes, the economy in other different ways, right? Well, I mean, we're talking about things like accelerated depreciation. We're talking about things like investing. I know there's one there. It's like investing in oil and gas. I just recently learned about one yesterday, which I wish I'd known about years ago, called the Augusta Rule, which allows you, as long as you're a business owner, to rent out your home. Now, granted, consult your accountant on this, but that allows you to rent out your home to yourself, to your LLC, and take tax-free income on that up to 14 days. And I was like, why did no one tell me this? That was tax-free income I could have had for the last several years. And I get to write it off on my my business income. So it's like, there's all these crazy cool loopholes out there. And the people who are smart are the ones who are figuring out how to use those loopholes.
Domestic demand for treasuries rather than relying on foreign central banks and the Federal Reserve to finance these deficits. And if you go through the math, it actually costs nothing, because as the demand for treasuries increases, the decline in interest rates and treasury interest rates lowers the debt service so much. I mean, as you said, we're at 35 trillion. A 1 percentage point decline in treasury yields wipes out $350 billion of debt service. So, and the interest that the taxes they're collecting on this interest is around 100 billion a year. So you give up 100 billion to save 350 billion. It seems like a no-brainer. So
all right, she sold me, right? You could never get the people in charge to believe that, but she sold me there. I like math. That makes sense to me.
I think this is a simple and elegant solution. We'll see if anyone, Trump, are you listening? This is an idea. And again, it's not to get around tackling the budget. We need to do that. Now is probably not the time, and it still won't solve the issue of how we finance it. We could bring the deficit down to 1 trillion. We still have a massive shortfall in the demand versus the supply.
Well,
yeah. So point being, we've got a huge problem with this American debt that we've all saddled ourselves with. How are we going to get out of this? I don't know. That actually seems like a pretty elegant solution there. Let's jump into our market analysis. Dude, I'm all about trying to find every way I possibly can to legally pay less taxes. I tell my wife and my kids, I'm like, listen, I'm going to find every possible way I can to pay as little as possible, short of going to jail. That's where I draw the line. Welcome to the OVTLYR Trading Room. This is smart trading made simple. Save time, make money, start winning with less risk. Now, that is what I like to call profit hacking. And we're going to be covering this today. So if you don't already have a copy of the Profit Hacking Playbook, go get a copy at profithackingplaybook.com, or you can grab it in the VIP Investors Toolkit area in our Discord. And for those of you who don't know me, my name is Christopher Uhl. I've twice been awarded top 100 people in finance. I've been successfully trading since 2009. I am a partner with OVTLYR, and this is my style of trading using OVTLYR. And the way that I like to trade, I like to call the golden ticket trading strategy. It's the 8 steps to turn profit hacking into pure gold. Now, there is the master key to this. And if the master key is not ready, I'm not going to be trading. So let's take a look real quick at this, right? It looks at the SPY signal, the signal of the S&P 500, if that's a buy or a sell. It takes a look at the market breadth, and it takes a look at the individual sector breadth whenever you get to that particular stock. So let's take a look first at the SPY. So let's jump over here. Oh, wait, I forgot to talk about NVIDIA. NVIDIA, I would say, is something that a lot of people are talking about, right? So this would be one that if you're looking at this debt situation and you're like, what am I going to do about this, right? Maybe NVIDIA is the right call for you, right? Maybe looking at NVIDIA stock is the right one for you, because it's been like one of the most popular stocks for the last couple of years at least. And the last buy and sell signal, actually, it went from around $83 split adjusted, $83 in May, up to $120 by June 11th. And then since then, what's it's done? Let's go over here to NVIDIA. Wow, it's down 6% today, by the way. So this is the buy signal here on May 1st. It went all the way up to here on June 11th. So it went up 46% on that one buy and sell signal. NVIDIA went up 46%. That's crazy. And actually, since that sell signal, it didn't quite make the top. It was within 1, 2, 3, 4, 5, 6 candles of the very top, which is pretty dang impressive that you got the sell signal there. And it's been just like floundering sideways. And then now with this 6% sell off today, over 6% sell off today, it's down 14%. NVIDIA is down 14% since that sell signal right there. And if we look at the performance summary, we're looking at 1,500% returns overall using OVTLYR's buy and sell signals. So definitely would recommend checking out OVTLYR if you want to get a hold of these buy and sell signals. All right, now let's go back to the market here, right? We actually do have a buy signal is still active on SPY. I would imagine that this is going to turn probably by tomorrow, maybe the day after. But we still have a 71% return using these OVTLYR buy and sell signals. So that's pretty sharp. But yeah, I can imagine here in the next couple of days, that's going to flip to a sell signal. But because it is still a buy signal, I wouldn't be looking to go short just yet. It's real close, but not yet. Now let's look at the market breadth. The market breadth is interesting too, because it peaked on July 19th. What day did we get out of everything? Day did we get out of everything? Or it was around July 19th we got out of everything. Anyway, point being, it crested over 75% market breadth. This is the number of stocks that are on the bull list, the number of stocks that are showing a buy signal. And when you reach extremes like this, right? If everybody's bought, what's left to do? It's a very obvious answer, and that answer is sell. That's exactly what we saw, right? And if you just tune in and like subscribe, click the subscribe button down below, you're going to see more than probably 99.95% of people out there, because we do cover this every single day. And I mean, it wasn't so crazy to think, oh, you know what? If everybody's already bought a stock, what's left to do? And the answer was sell, and that's what we saw, right? Over the last several days, we've had a pretty monster sell-off here. Now, normally, I would be looking to start going short on a day like today, because we have the 10 under the 20 period moving average. Price looks like it might close under the 50. It's pretty close to doing that. However, like I say, we do still have a buy signal. So even though market breadth is bearish, even though the moving averages are bearish, we still have that buy signal, right? It's pretty close, Brian, but not quite there yet. So because of that, that's the master key to unlock the golden ticket trading strategy. Oh, I like the master key to unlock the golden ticket trading strategy. I'm gonna have to use that. Because I don't have, all of this moving in the right direction right now, I'm not going to be trading today. Now, that doesn't mean that you can't. There's obviously new opportunities every single day with OVTLYR, and you can just go to the watch list here. I mean, you can go short, you can go long. We give you opportunities every single day with the bull list and the bear list. Let's take a look real quick and see. So there's 12 new names on the bull list today and 35 new names on the bear list. So 12 new on the bull, 35 new on the bear list. Scalping SPY has been fun today. Well done, Brian. Brian, you are definitely taking a lot more risk than I'm interested in taking right now. So continue to do that, my friends. And thank you all so much for coming to today's OVTLYR trading room. It's very possible we'll start loading up on shorts tomorrow, but we just have to see, right? Follow the plan and continue to work the plan. Have a fantastic afternoon. I'm going to try and go take a nap. Have a great day. Talk soon.